Okay, can you see my screen?
Yes.
Okay, awesome. Hi, everybody. I'm Alyssa Chapnick with Finance of America. That is Jim Goldstein. And so today we're just going to go over like basics. It's kind of a small group, so feel free to like jump in, ask questions, raise your hand, whatever. And we will answer your questions.
Can I get can I take a poll about kind of the experience level in terms of, is everybody a newer agent that's on the call?
I'm not. I jumped back in last year after a 12-year hiatus.
How you doing, Jennifer?
I'm good. I'm good.
You happy to be back in the fray?
I am. I didn't realize how much I missed it. And of course, just as I was transitioning, the pandemic hit, and boy, I've been busier than ever, and way to throw me right into the fire right away again.
So this was all your fault? You got back into real estate and then the pandemic hit?
I left in 08 when it crashed, and I'm back for the pandemic.
Nice to meet you. And I guess I'll take it that everybody else is on the newer side. So thank you.
Okay, so we're just going to go over the basics. This is your ideal timeline. We say ideal because everybody's time frame is going to look a little different. Sometimes a house just pops up that you have to go see and you don't have everything in order yet. So ideally, you would want your clients to get pre-approved first, then start your home search, then go under contract, then the mortgage process starts. So the pre-approval process, what do we ask your borrowers for? So we look for 2 years of employment history, so name, address, phone number, most 2 recent W-2s to show their income is stable, 1 month worth of recent pay stubs to show that they are still employed, and again, to show that the income is stable, and then 2 months worth of bank statements with all pages. If they are self-employed, we'll look for a year-to-date profit and loss and also 2 years of business and personal tax returns.
So I'll jump in and just ask, first of all, does anybody have any questions on the timeline or on what we asked for? Okay, and then my other question is, in terms of how you get the ball started with a lender. Do you feel like you have a comfort level for how to, I guess, bring the lender into the conversation when you just, started to engage with a buyer? Anybody? Okay, not at all. I see that in the chat. So, Alyssa, do you want to just kind of, what do you see, like some of the agents that you work with that are effective at kind of getting their buyers, into the game?
Yeah, so I think the key, first of all, to being a good and successful agent is to have some like systems in place. So a lot of times people will have like templated emails of how they introduce their clients to a lender. It's always nice to be all connected on one email or one text message group together, because a lot of times people get busy. You can give them our information and they could not reach out for 3 weeks. However, if a house comes up in that 3-week time frame, they're going to make time to go and see it with you because they want to see it. So it's super important to kind of have everybody on the same page. And I always say it's best to just put everybody in one email or in one text message, with phone numbers, with emails, with names, just so we can all be on the same page. We can email back right away and say, when are you guys free to jump on a phone call for 10-15 minutes? And that's really the best way that I've seen. What do you think, Jim? Is that what you're seeing as well?
Yeah, I would say my most successful agents, they're good at, I guess, earning some trust. They go, to the point where they earn a good, a level of trust with the person, depending on how the lead comes in. If it's if it's your sister, that's one thing, but if it's somebody that you found on Zillow, that's different. So they adjust their approach level and earn the amount of trust that they need where they're ready to make that referral. And like you said, Alyssa, I think the best ones do it in where they connect everybody either through a text or or an email, and then they really kind of define the way that the next thing's going to happen. Like, please, please, introduction is done, and please reach out to each other. They kind of give a timeline. I'm hoping that you guys can get together within the next day or two. So if any of you want, Alyssa, you probably have some, samples that you could clean up, and make them neutral so we don't know who's involved. And so if anybody would want to see a sample of that, just ping Alyssa, and all right, you got one, yes. And
I can't see, I don't know why, maybe because I'm sharing my screen, but I can't see the chat. So
okay, so Jerry Do, Jeridu, said, yes, please. Jerry's our #1 chatter. Nobody else wants to chat.
Jim, can I ask a question?
No, sorry, Andrew.
All right, I'll leave.
Yeah,
from a buyer's perspective, what does the pre-approval process look like? How long does it take? I know it sort of depends, but what does that look like?
Dude, you're stealing Alyssa's thunder, man.
All right, I'll wait.
No, that's okay. I'll jump ahead.
Yeah.
Typically it takes, I'm going to say typically because again, every situation is not going to be the same. Typically we can pre-approve somebody in like half an hour on the phone, and send them over a pre-approval letter as long as everything looks good.
Well, and I would just qualify that if they're newly self-employed, or if they're self-employed at all, or there are any issues, no, not half an hour. But if it's a straight up, salaried wage earner, their credit's okay, they have some money, always helpful when you're buying a house, then yeah, I'm sure Alyssa and I have both gotten that call at Sunday night at 8 o'clock because somebody woke up that day and decided they wanted to buy a house. And, there's 17 offers in it, and the deadline for getting your offer in on this property is, 10 o'clock that night. And, the amazing thing, for me, who's been in this business 34 years, Andrew, is how fast these things can get done compared when I first started in the business. It took us like 10 days to get a credit report. Now it takes 45 seconds. So, yeah, so I think that's right, Alyssa. Half an hour is, don't take that to mean that, if you need a pre-approval, you're going to wait till half an hour before you need it and then contact us. The more time we get, the better. But we can do them.
I'll go back to this slide.
I have another question about credit, but I don't want to jump ahead in your presentation.
We actually don't have that much about credit, so you can ask your question.
I think our timeline's pretty well shot already, Andrew. So just go ahead. Let's wreck the ball.
Do you guys have any systems on your end, credit repair, anything like that to help a potential buyer increase their credit?
Yes, we do. So we have a credit simulator. So let's say that we run somebody's credit and it's 580. Let's say we need to get it to 620 and their ideal time frame to move is in the next 60 days. We can put it through our credit simulator with their credit report and say in the next 60 days we need to bring
Hey,
up
Alyssa, your volume is cutting in and out for me. Is that happening to anybody else as you're listening? I'm seeing some nodding heads. So I don't know if you're on your AirPods or.
No, I'm not.
Okay. Maybe just lean in.
Weird. Okay, Jim, do you want to explain it?
Yeah, so like she said, we have these predictive modeling. The credit agencies that we use have predictive modeling tools. So we can ask them, this 580 person, what would it take to get them to a 620 in 2 months? And it's very, very helpful. We've used it to get people in the game so that they're able to qualify. And we've also, somebody's one digit away from a 740 FICO score, and the pricing is going to be better, and their mortgage insurance premium quote is going to be better because it works in those buckets. We can bump them up to where they need to be and improve their pricing. So great question, really, Andrew, because I think it's one of the services that's maybe not known or understood that good lenders can provide.
And you forgot to mention it's free.
Oh yeah, everything. We're free. You can use us and abuse us. There's no charge.
So I always say
Free.
It's free and it doesn't hurt the client to put their information in. If it says that they have to pay off their car and they don't have $25,000 to pay off their car, obviously they don't have to do it, but it doesn't hurt to put their information in and see what comes back.
Okay.
Okay, so what is the value in getting a pre-approval? I'm sure you're going to hear this from your clients. Why do I have to get pre-approved? I have great credit. I have an excellent job. My credit is, superb. I have tons of money saved up. Why do I have to get pre-approved? I know that that's not going to be an issue for me. I'm sure that plenty of you are going to hear that multiple times. So we have to show the clients the value in getting a pre-approval. One, it allows them to know their purchasing power. They could be looking in 300,000 and maybe they could qualify for 500,000, but they weren't aware of that. Increases their negotiating power. So when they go to submit an offer, you're going to be submitting it with a pre-approval letter, showing that they qualify, showing that they're serious, showing that they've done all of their homework prior to going under contract. It makes the whole process a little bit smoother once they do go under contract. And it just kind of makes it a little bit less stressful for the client. Again, just knowing that they qualify for that purchase price. And also knowing the monthly payment. So like, especially in the city, this is super important because a lot of condos have very high condo fees. And clients don't take that into consideration when qualifying for a mortgage. So they could think that their monthly payment is going to be $1,500. But maybe there's a condo fee of $500 and now their monthly payment's $2,000. So it's really important to make sure that they feel comfortable with that monthly payment and to make sure that they know that they qualify. So differences between pre-approval and pre-qualification. The biggest main difference is a pre-approval does have a credit pull and a pre-qualification does not. So a pre-approval is like a thorough check of their documents, thorough check of their credit report. We run it through our automated underwriting system and say, congratulations, you're pre-approved for X amount. Pre-qualification is more for somebody who is in the beginning stages. Maybe they are 6 months out, maybe they're a year out, and they just want to get like a ballpark number of what they qualify for and how much they have to get saved up. That's really what that is for. If they are close, if they're 3 to 4 months out from their ideal move-in date, a pre-approval is the way that they want to go. If they're further out, a pre-qualification will do just to give them a ballpark number of what they qualify for.
So I want you to think of Alyssa as the play-by-play on this, and I'm the color commentator. And so, Alyssa, how many times have you had a conversation with somebody who said they were 6 months out, and then like 3 days later they said, "I found a house and I love it"? So I think one of the things that we do, or at least I do, is to try and understand why they're 6 months out. Sometimes that's arbitrary. Sometimes there's a hard stop reason why they couldn't do it. And we want to understand that. And just to me, the beauty of a pre-approval is that if you need when you have your pre-approval fully in place, your credit's been pulled and it's a valid credit report for 120 days, you're ready. And if something does come up, you can act. Doesn't mean you have to, but if you want to, you can.
Good point. Really good point. Okay, so what we look for when we qualify somebody, I'm not going to get like too deep into this because you guys don't have to know the back end of it, but really just like a broad overview of it. So what we look at is somebody's debt to income ratio. So we take their current debts that are on their mortgage with their projected monthly mortgage payment and divide it out by their monthly income. So we get a debt to income ratio. So typically needs to stay below 45. There are some cases where we could stretch it to 50. And just here's like a brief example. Their mortgage, principal, interest, taxes, insurance is going to be $2,000. Maybe they have $500 worth of reoccurring monthly payments. So maybe a car payment, student loans. Here's all of their total debts, $2,500. Their gross monthly income is $6,500. So we divide out the debts by the income and their ratio is 38%. So this means that they would qualify for a payment of $2,000 worth of mortgage money.
Or more. Hey,
Or more.
Yeah, your mic is still doing that. So everybody hear that okay? All right, good. We're getting some yeses. Gotten a thumbs up.
Okay, so once we run credit, we check their debt to income ratio. We check their ability to qualify. We would send them over a pre-approval letter. And this is what a good pre-approval letter will look like. It'll have the borrower's information at the top, the date that it was given, their name, the purchase price, loan amount, the loan term, what type of loan it's in, and the expiration date. And all of this is needed really to make an offer, because on the agreement of sale, there is a mortgage portion, and you're going to need to know all of this information. Okay, so now your client's pre-approved, the home search begins. So pre-approval do's and don'ts. We like to go over this because clients, once they're pre-approved, for some reason, they just like to go crazy. They like to buy new cars. They like to quit their jobs, just nonsense that doesn't make any sense. So some pre-approval do's. Report any down payment gifts. So if they're getting gift funds from family members, just make sure that it's traceable. If their parents are giving them $10,000, the parents are taking it from their account, putting it in their kid's account. There's no back and forth. They're not withdrawing it cash and then redepositing it. It has to be traced. Stay current on all of their.
Can I
Yeah.
interrupt for a second?
Yeah.
I know you're used to me interrupting you, so. I see some people taking notes, and will you send the presentation to everybody when we're done?
Sure.
So if you're taking notes, that should save you some time.
Stay current on all of your monthly debts. Keep making payments as if you were prior to when you were pre-approved. And then keep track of any large deposits that you are going to be making into your account. So if it's around Christmas time and you're getting Christmas checks from family members, keep track of all of that, because the underwriter will flag any large deposits into somebody's account. Yeah.
Can I say something else? So in all this stuff, if I'm a new agent, the debt to income, I don't really feel like, if I was an agent, I need to know a lot about that. That's something the lender's really going to, be on. But this do's and don'ts, since you're the first one that's going to make contact with the buyer, I think that this is something that can position you as knowledgeable and helpful. So if you get in touch with them and say the lender doesn't talk to them until a week after that, and you have let them know some of the things that they should or shouldn't do, that Maserati that they were planning on buying, maybe they should hold off on that until after they buy the house. Those types of, and information about not getting credit inquiries. I mean, even if, one of your current creditors wants to increase your credit limit, but they're going to need to do a hard inquiry to do that. That could potentially lower your FICO score a couple of points. So I think those are, just a couple of little throwouts that you as an agent can give helpful information to your buyer customer. And, it shows you as knowledgeable. And I think it helps you earn that trust that you're looking for.
Yeah, and just
I have a
keep in
question
mind.
regarding the gifts. Is there an amount of money that they consider a gift, or just any amount?
Any amount.
Well, I would say any amount, but I would also say that generally any large deposit is usually defined as roughly 50% of your net income. So if if you make 60,000 a year, so 5,000 a month, and your income is 4,000 net. So if there's a $2,000 deposit that's unrelated to a regular pay, that's going to get questioned. I mean, so if your parents are cheap and they give you $200, it's probably not going to get questioned. But any large deposit that is coming in the form of a gift is going to have to be documented.
Okay, so pre-approval don'ts. Don't make any big life changes. Don't quit your job. Don't take out any new loans. I've seen this so many times where I advise people not to, and they go out and get a car because they're afraid that their car is going to break down. That could potentially mess up their loan. So this is not like for everybody. Somebody might be able to still qualify for a car payment with buying a house, but they would have to run it past us first.
Yeah,
If they say I'm looking to go get a Honda and the car payment's going to be $200 a month, does that still work with my pre-approval? We can run that ahead of time before they go out and purchase it.
that's the best advice, I think, is to check with your lender. And then the big one, I think, is they're going to buy a refrigerator, they're going to buy furniture, they're going to buy a whole bunch of stuff for their house. Probably the best idea, you have to check with your lender first before you do that. But in many cases, it would be better if you held off until after the loan has closed.
Don't make any big deposits or withdrawals. Don't change banks. Don't open up any new accounts. And don't let any third parties run your credit. Okay, Jim, you want to take these over?
Okay. Yeah. So, in this market that we're in, this is probably the most intense sellers market that I've ever been in all the time that I've been doing this, because of the low inventory, the incredibly low interest rates, and the pandemic related need to, get into a new space. So we're in the pre-approval is less questioned today than it is in a normalized market. I think everybody is kind of understanding that if you're going to buy something for 400 and you're going to borrow 380 of it, you need to prove that you can get the 380 to the seller and to their agent. But so let's say you're skilled enough to win the bid, and you get you're ready to put the offer in. You want to have your pre-approval match the offer. It used to sound like, the house is listed for 300, but I'm going to offer 290. That's what it used to sound like. Today, it sounds more like it's listed for 300, but we're going to have an escalation clause to 340. So we, psychologically, when you could get a deal on a house, we typically would have the pre-approval letter match the offer. So if you were going to try and buy that 300 house for 290, we would put the pre-approval letter in for 290. We felt as if psychologically, if the seller saw a pre-approval letter for 300, they were going to say, well, they can afford 300. I'm going to take 300. Yeah, those days we haven't seen anything like that in a while. So today it's more what I'm seeing, and Alyssa, tell me I'm sure you're seeing the same thing, is if the house is 300, but it's going to take 330 to get it with an escalation clause, we would provide a pre-approval letter at the top of the escalation clause. Something that I've also seen is that some agents like to get 2 pre-approval letters because they're going to start at 300, but their buyer's willing to go up to 325. So we give them the 2 pre-approval letters. They start off with the 300, and then if there's counters and they need to provide an updated pre-approval showing that they're qualified at the higher price, they have that in their back pocket.
Yeah, that's a good point, Jim. And also, that's also something to keep in mind. So let's say that we say this client's pre-approved for a maximum of 300,000, especially in this type of market, maybe they should be looking at like 275.
What was that? Still having a hard time hearing it.
Can you hear me now?
Yeah.
Okay, so I was saying that's a good point. Like if we say somebody's qualified for a maximum of 300,000, in this type of market, maybe they should be looking in like 275 range, just because most of the time things are going for over asking.
Yeah, that's a really good point. And like the bottom point, where once we have somebody profile built in our system, revising pre-approval letters is just a couple minutes on our part. And one of the things that we can also provide that's helpful to the agent and to the buyer is a fee estimate. So at the time that you're putting the offer, the fee estimate can also show the buyer what's your payment going to be, what's your cash to close going to be. In other words, how much is your down payment plus your closing costs. I'm always happy when the agent has made the buyer aware that there are closing costs. So if you're buying something for 300, If I'm the first one to let them know that they're going to have about $15,000 worth of closing costs in Philadelphia, you know, it's closing costs are no joke. So making the buyers, and again, it's a timing and trust issue, but there's a certain point in time where you don't want to scare them away, but at some point you gotta make them aware that there's the cash to close is going to involve their down payment plus their closing costs. So the fee estimate helps the agent do the agreement. It shows the interest rate, and you know what the payment's going to be for the buyer. They know how much money they're going to need to close. So I think it's also a helpful document that we can provide very easily once we have somebody built in the system. And I think KW, I think from a compliance standpoint, you need an early estimate to put into whatever system you're using now, whether it's .loop or whatever the new system is. So these fee estimates can satisfy that compliance requirement also. Still me, Alyssa? All right, so then your offer is accepted, you're under contract. So at that point, the pre-approval is going to need to be converted. And that's kind of where I think everybody starts hand-holding the customer from this stage through closing. If you're on a team with a transaction coordinator, or if you're using Lauren, their services plus the lender services together are really going to help the buyer get all their I's dotted and all of their T's crossed. So the the title work gets ordered, the inspections get set up, and there's a serious amount of checklist type processes that have to be in place. And I think that when you're on a good team, or when you have a good transaction coordinator and a good lender working in tandem, buyers really appreciate it, because, dude, it's overwhelming. If you think about all of the things that you have to try and remember, it ain't happening. I mean, my memory is gone. So, if I don't have a checklist and I don't have something to check off, it ain't happening. And I think that it's also an emotional time for buyers. So, maybe if they're normally somewhat organized, I always said this, when you buy a house or sell a house, you become temporarily insane. You just lose all sense of reason, and you get very emotional. So you really need, if anybody thinks that you can buy a house online and you don't need a realtor, and you can use Quicken or what Rocket, that's not happening. You need, if it's the most important transaction in someone's life for the most part, and they need an expert who cares about them, holding their hand all the way through the process. So this is where that action really starts. Once you get under contract, your good transaction coordinator keeps everybody. Was application made within a certain time frame? The mortgage commitment, the first deposit's due, the second deposit's due, the appraisal has to get ordered, the title has to get ordered. This is where everybody kind of comes together. And one of the nice things, spoiler alert, here's an advertising for your in-house lenders. One of the nice things about being an in-house with Keller is that we're pretty well integrated. We're doing multiple deals, with all the transaction coordinators, and we have a very well coordinated. They know our processors and underwriters, and everybody kind of has a flow together. So it's a benefit to the customer to have a team that is well integrated and is going to help them go smoothly through the process. I think that's the most thanks that I get. At the end, we send out a survey, and for the most part, that's what the comment I see the most is, you really helped us, stay organized and keep on track throughout the process. Closing. Should I keep talking, Alyssa?
Yeah, you pretty much whizzed through all of these slides. So we're at the closing table, or
All right.
closing
Well,
day.
I gave you guys 15 minutes of your lives back that you'll be able to use for something more beneficial than this. So we're all the way to closing. I guess that So closing is the day, as I think you guys all know, when the keys change hand, the deed, a new deed is prepared, they become the happy new homeowners. And at the closing table, multiple documents are signed that basically show that they're the new homeowner of the property and that there's a mortgage in place. So they sign a note with us that is their personal promise to repay the loan. They sign a mortgage, which is one of the two documents that become recorded because of the transaction, the deed showing that they're the new rightful owner of the property, and the mortgage showing, well, they're kind of the new rightful owner because we are using the property as collateral for the loan. So the title company handles the transaction. They're the kind of the money exchanger. All the wires that go wires and cashier's checks come into them. They collect them and then they do the disbursements. When I'm at close, I remember going to closings was pretty cool, but I was the only one who didn't get a check. So the realtors get a check, the buyers get a little bit of money back, the sellers get a lot of money. So the title agent conducts the closing, and then voila, they're happy homeowners.
So I have a quick video that kind of sums everything up, but does anybody have any questions before I play this?
I have a quick question, Alyssa. So let's say I have a buyer client and we choose Finance of America. You guys are our lenders. And then do you choose the title company and underwriters, or like how does that work? Or do they have an option?
Yeah, that's a good question. So underwriters, we use all of our own underwriters. But as far as title, the buyer has a choice of whatever title company they want to use. Of course, it's recommended for them to use Go Abstract since that is in-house as well. But of course, they could choose whoever they like.
Yeah, and I would add to that title fees are regulated in the state of Pennsylvania. So there's really no benefit to shopping. The benefit to going with the in-house title company is, like I was saying before, we're kind of all clicking on all cylinders. Everybody knows everybody. It's no sense that of all the things that the buyer has to take care of, why shop for title insurance when all of the costs are regulated? So I would say almost 100% of the purchase transactions that I see, the buyer's agent, places the title order for the buyer on behalf of the buyer. And as far as underwriters, again, here, spoiler alert, this is a commercial for Finance of America. We have a decentralized process. So what that means is that within our branch, we locally originate the loan, we process the loan, we underwrite the loan, and we fund the loan. So as opposed to if you always see Rocket Mortgage, and if you talk to any experienced realtor, Jennifer being one of them, would probably say that the internet lenders are a nightmare. They don't get you to closing on time. Try calling them at 5:01 p.m. and see if you get an answer, or a weekend, God forbid. So we have our in-house team. I used to manage the branch. Now my friend Chris manages it, and we've hired all of our personnel. So the people who are processing, underwriting, and closing the loan are people that we know, are dedicated to getting the job done smoothly and on time, just the way Alyssa and I are. And I think it provides a really higher level of service. And I guess we could probably work anywhere, but I've always been happiest and felt like I could deliver the best service levels when I have a decentralized process where the processor, the underwriter, and the closer all work together in the same branch. The closer I don't know if I touched on this or you did, Alyssa, but the closer is the person that prepares all of the closing documents and then funds the loan. So the documents go, the title agent gets, or we get everything signed. The funding documents get sent to the closer, and then the closer says that the loan is clear, it can be dispersed. So when you have your own person doing that, you have much more control over the timeline, and you don't end up sitting there staring at each other for an extra hour waiting for the funds to come through. Personally, I can only remember one joke at a time. So if I have to fill up an hour, sitting there staring at somebody, I'll probably be good for about 45 seconds and then I'm done. So, it's very nice to have, more control over the process to have things go smoothly on that last day, because that's the last impression that you're going to make.
Yeah, and I just want to add to that. I actually used to work for a bank, and funding did take sometimes 30 minutes, 45 minutes, and we're just sitting there staring at each other. And it is so uncomfortable. And at this point, your clients just really want to go home. They want to start to clean. They want to start to unpack their cars. Their stuff might be in moving boxes, so it's super important to kind of wrap it up quickly, let them get their keys, and let them move on with their move. So yeah, super important.
And I'd
Any
like to
other
add
questions?
a little something. I'll let you know that, Alyssa is reachable at any time. I don't like to make a habit of it, but there have been times I've been on the phone with her at 9 or 10 o'clock at night to resolve an issue with a crazy neurotic buyer who we had to handhold through some things. And, last year, just to show you how well it is to work with somebody local like Jim and Alyssa, I had a buyer who picked a mortgage company that was in Arizona. And as much as I tried to get them to use somebody locally, they fought me on the issue. They stuck to their guns with this lender out in Arizona. I could only reach them on 9 to 5 hours, and we had the time difference of Arizona. And so nothing was ever quick and speedy. Sometimes it took them a day to get back to me. And then the night before closing, at 9 o'clock at night, I was doing the walkthrough of the property, and the buyer said to me, because they had gotten their final closing costs, this mortgage company got everything to them the very last minute. We were closing at 9 a.m. the next morning. So at 9 p.m. the night before, we're doing the final walkthrough of the house. And they said to me, they were blown away by the title charges for the title company on their final closing cost, and that their mortgage company told them to shop around and get a new title company. And I was like, oh no, it's too late. Pennsylvania is state regulated. You're not getting a cheaper price. You were made aware of this from day one of working with me, because I gave them estimated closing cost. And this company turned on them the night before. So I had angry buyers that came to settlement the next morning. And we were already a week behind settlement because the mortgage company dropped the ball and gone through underwriting. It was a nightmare situation. And I insist everyone use a local lender who knows the market, who you personally have a relationship with and can get on the phone. Alyssa has stepped up and helped me even just to answer questions. They've been great. So it's build those relationships. They're very, very, very important.
Thank you. I appreciate it.
Hey, can I add one, since we're piling on to internet lenders, one other thing, and again, if your job is to help advise and counsel your buyers. So one of the other advantages of a local lender is that every lender is required to use a roster or a panel of appraisers. So we can't say, give this appraisal to John, but we can make sure that the appraisal goes to one of the appraisers that's on our panel or our roster in a rotation basis. The local lenders are able to have a roster of local appraisers. A lot of the internet lenders use these national services, and you can get an appraiser from Podunk, New Jersey, who's wants to go to the property and is calling you up to ask where Broad Street is. So that's another reason if your buyers are saying, well, why should I use this company? I don't think you ever want to feel like you're steering them to one company, but you do want to feel like you're giving them all the reasons why they want to take advantage of a local lender based on some of the service advantages that a local lender can offer.
So just for example, Jim, I actually just had one. They were referred to me from a KW agent, and we quoted them a rate probably 3 months ago.
You got to lean in. Yep, sorry.
We quoted them a rate probably 3 months ago. They also got quoted from Rocket Mortgage. They went MIA on me, didn't hear from him, followed up. totally gone. Like, okay, I guess they moved on. They called me 3 weeks ago and said that their appraisal with Rocket Mortgage came in $125,000 light. And that they made a mistake and that they want to restart the process with me. So put them through underwriting. We just got the appraisal back yesterday and it came in at value. So huge, huge, huge deal, especially in Philly because parking is a premium. Higher floors are a premium, better views are a premium, things that
And
appraisers
how
that are
about if they
not,
get a Trinity with the kitchen in the basement? An appraiser that's not from Philly will have no idea
clue.
what to do with that property.
right? Yeah, super important.
Questions, anybody else?
Hi, I don't have any question. I just want to say this was great. I'm very new. I just applied for my license, but I would love to get in contact with Alyssa. And I would appreciate if you could send me this one as well, because I'm probably not in the system just yet. So I can put my email if you want.
Yeah.
Yeah,
put
if
your
you could
email in
drop
the
your
chat.
email.
Perfect. Thank you so much. It's very informative. Thank you.
Pleasure. Welcome.
Thank you.
All right. Any other questions? I think I feel like, Alyssa, I feel like we did a very good job of covering the mortgage basics. So if anybody has any questions, and Alyssa, Alyssa's your primary contact. I am also available. If you need a question answered, anything after 6:30 p.m., you're going to be much luckier with Alyssa than you are with me. I'm kind of an early to bed guy, but if you need something answered at like 5:45 in the morning, I'm probably, going to be a good source for you. Anything you want to add, Alyssa?
I don't think so. Thank you guys for spending your
Hey,
Wednesday.
Alyssa, I took a quick screenshot of the participants, and I emailed it to you. And so between you and Andrew, I think we can get the presentation out to everybody.
Okay, awesome.
All right, everybody have a great day. Thanks
Thank
for
you
your time.
guys.
Thank you.
Thank you.
Bye
Bye.
now.
Thank you so much.